All right. Welcome everyone. Thank you. It's me, Professor Spied Saeed. This is our third session on actually basically on our charts. Today we'll discuss EMA traps, right? EMA or DMA, or simple moving average, whichever one you prefer using. What you are looking at on the chart, we have two different time frame, right? I have on the right, I have my hourly chart, and on the left, I have my 5 minutes chart. So I'll take out that two hourly charts and completely focus on what it means for the simple moving averages or moving average. Right? This will clearly focus on your entry and your exit point. This is very, very important, guys. If you're looking to enter at any position, either between my call out, out, want to do your own research to get in, I think this is something you should really focus on, right? On if you're scalping long term, whichever, it doesn't matter, right? But notice it here, right? This is where I'm gonna leave it, and I'll ask you guys question in terms of what do you see? See, these are my simple moving average. This is 5, the green. This is 9, the yellow, and the red is my 20, and then you have my VWAP, the dotted pink line, right? So I'll leave it here, and I want you guys to tell me what do you see before I jump into it to see what it means for me or anyone else. I mean, I'm just looking at it. If you don't know what it means, there's no point for either one of us to kind of look at it and say, I don't know what it means. But this one tells you what your entry, exit point should be. And I'll explain it to you why it works 99% of the time, and you will see it throughout the chart. Multiple examples in terms of how the EMA kind of interacts with each other, right? It's kind of like their loving and hating relationship kind of works hand to hand when you use it as a support resistant for entry and exit. So I'll pause it. I'll open it to you guys. Ask me a question in terms of what do you see in the chart? Does it make sense to you? What am I looking at? And things, whatever makes sense. Just throw some questions so I could take it from there.
So at the beginning of the day, it's the 5 hour, the 5 days above the 10 day, it's above the 20 day, which means that it's that those are all, I think, positive bullish indicators. And then it's above the VWAP, which means that it's trading at a above. Um, if I understand correctly, that's all I know is that if the 5 is above the 10 is above the 20, that means that's a good bullish trend. And then when the 5 starts slipping underneath one of those indicators, that means it's starting to make a downfall.
Yes, 75% of it is accurate.
I wanted to add on Freddie's. So when the 9 day crossed the 26th or 20 day, 26th day, the red line.
The red line is 20 actually.
Oh, 20. Okay, so when the 9 day crossed the 20 at what 8:30 in the morning, obviously that's indicating a bullish. It's going to make a bullish uptrend, which it did. I agree. I'm with Freddie on that way. Price action is above the VWAP. So that's also a bullish indicator. I guess my plan would be the exit point because you can see there that the 5 crosses the 9 right there at the tip, which would be around like 11:45ish, I would say. But I guess that line would be your signal, hey, get out, I guess, or a resistance it hit.
Correct. Almost correct. You missed more. Actually, you missed tiny little things, two little things. You guys are pretty much on point. How about anybody else? I mean, if you're new to, our trading style, if you're new to even trading or looking at charts, ask me a question. What doesn't make sense for you? I mean, aside from what, Chris and Freddie had mentioned, right? What else do you guys see? Right on those charts. I'll leave it to somebody else. I know you guys are very good. Someone else, someone new, ask me questions so I know what you're looking at versus what I'm looking at. I don't want to put anyone on the spot, but feel free to ask questions. So we are all here to learn and stuff. So I mean, you could ask your question on the chat room too if you want. You just throw it in the chat tab on top here. You could say chat, if you have any questions, I'll leave it here as well. And then we'll go into explaining what it means for me.
So my experience, just my mindset at 9:30 in the morning, because that's when I was starting to look at the chart. Is, hey, I saw that we've been green for the last hour. I kind of feel my mindset is like, I kind of feel like I missed it, and I need to wait till it has a downturn before I can get in, or else I might be buying it near the top. And that's maybe incorrect, but that's kind of the way I see it in the morning. Is, hey, look, I missed the last hour. We've been tons of 10 straight bull bars. I might be buying at the high, even though clearly there's more room to run. And so that's just I'm just letting you know that that's sort of my interpretation of it, which probably is inaccurate.
Oh, that's fair. That's a fair way of looking at it. So that's it noted. Anybody else before I start explaining what it means for either on the EMA, DMA, or pre-market, or what it's doing? All right, let me jump straight into it. Freddie, you are right? Most part of it. I want to see what's happening in the hourly, right? Before I look into the 5 minutes, right? For example, Friday, if you already came in the morning, my suggestion would be you look at what's happening pre-market. I mean, we have our auto support and resistance, which is fine. But at the same time, I want to see what's happening in my hourly here, right? This will kind of give me direction in terms of what's going to happen at the open. So you're technically not really missing out a lot if you come into the hourly, and then obviously market opens at 9:30, middle of the hour. And then you see kind of like, sell-off, little sell-off here and there, and then kind of candles, kind of buyer, seller, pushing, playing around. I mean, this is SPY, right? The SPY taking the whole volatility of the market and measuring it. So you would see probably a bit differently compared to specific ticker, right? So what's happening here, right? I follow this one. In the morning, I want to see what's going to happen. Obviously, this does matter for your entry points, but at the same time, you want to focus on this morning candles, like the first, like morning action, what's happening. See, I already had an indicator hourly. Right after market close, I already had an entry point at a reversal here, right? At the bottom, obviously, my top ticker is telling me hourly looking good. 3 days looking good, 4 day. Let's say I never had any of this indicator, right? If I remove any of the indicator, and I don't know what's happening on top. So I close this one out. I just want to see, my plain chart, my vanilla chart here without knowing anything, and I have my support and resistance, right? I have this side by side. I look at this. I see what the volume is telling me, right? This is the volume. I have my RSI diversions. I have my, momentum. I have my TTM and all that. Let's say none of this existed in the past. How would you know what to do, or where is your entry point based on looking at hourly chart? Let's say hourly is bullish, right? It's holding above the SMA is here, kind of holding above here. VWAP, I mean, pre-market is there, but then really, right, still above VWAP at some point here, right? Below, above and below, it crossed above right here. But this is, look, how beautiful it's kind of holding up, right? You see the 9 days holding at a support, and then 5 days taken right at the leg. So I want to make sure that I want to make a right entry, or maybe I just want to do an entry. I don't care what's happening in the 5 minutes. Maybe I enter too early because I know my hourly is good. I think someone's asking for the link. I already posted the link. Anyways, so what you could do for your entry points, right? Let me remove this one for now so you guys can see clearly here, right? and if it makes sense, and then we'll go into entry point. Now, how does the trap work? Right? Typically, if you were to enter a position, let's say you come in the morning, it is always suggested by major traders, everybody that's in the market, to not to enter in the earlier stage, right? Between, let's say, from somewhere between 9:30 to 10:30, you don't want to enter any positions. You should focus on closing your previous positions or kind of let the dust settle and then watch it, right? If you have positions open from previous, they just close it out at any entry point, because that's the most volatile situation. You just want to watch the market. And obviously, if you see profit, take it. Take it until just keep watching, following your SMAs, and then boom, go from there, right? Entry point somewhere between, mid-afternoon, when market start, volume starts coming down, start trending down, and then it starts going up again with before power hour, right? Somewhere between 2 to 30 or sometime earlier, depending. Since we are looking at SPY because it's measuring the entire market volatility, let me move quickly to, let's say, any other indicator. Just give me like whichever, Apple. I'll just look at Apple and say what's happening in this 5 minutes, where my entry points are, and what's happening, right? So I will jump right into driving into this. Oh, this is not looking right. Okay. Oh, why is it not letting me? Okay, where's my Zoom? Things are acting funny here. Let me see. You guys could ask me a question while I try to get this thing.
Yeah, I was gonna just add on there, like typically when you're approaching lunchtime is a good stock consolidation time where a lot of things tend to pull back and settle down. Not a lot of volume, things move sideways.
Yeah, that's why it's entry and exit point becomes critical. I mean, Friday is a good example because it's been up, 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 even though typically Friday sell-off comes in. But let's focus on what we want to do in terms of entry point. So here, I'll give you a perfect example, right? Look how this pre-market's happening, right? You see this entry point here? I mean, obviously we're not trading options in the pre-market. We are not allowed to. But what is it happening? Are you guys seeing the crossover right here, right? So what does the trap means? It means every time the smaller time frame, for example, 5, right, pulling closer to the 9, right? You will always see every time an entry or it's ready to push up, you will always see a pullback. So what is called as a pullback, right? Even though the entire trend is up, you will see a pullback. So if you missed an entry at some point, you should be able to catch that again at a later time. I mean, this is almost 100%. Market doesn't always move in one direction, right? It pulls back, kicks off, pulls back, kicks off. So you could see it. Look, if you see here, right, as you can tell clearly, right, look, the yellow line, right, came down here. The 5-day simple moving average, it pulled over down here and it crossed, right? It pushed here and it got pulled over here again. So this is your entry point, right? It should be ready. Say, hey, you know what? It pushed over. Let me see if it comes back to the 5-day. As soon as it pulls close to the 9-day, this is somewhere your signal for entry point. After that, look how it's nicely holding. Again, every time it fell down or fell above, kind of still holding above the yellow line, right? Above the 9. Let's say you missed it here. You come in the morning and you're looking at this, like, oh my God, I missed a good run up. What do I do now? Then you look at your 5-day simple moving average. It's again pulling back to the 9 simple moving averages, right? It kind of becomes a trap. You see, whenever the crossover happens, it kind of builds up a little trap for us to enter here, right? It's always pulling back. You'll see every time you miss something, you think you missed it, it will pull back to right on one of these. either the yellow one or the red one. So kind of pulls back, goes again, runs up again. It pulls back closer to it, right? It's like a slingshot, right? You pull it, you bring it closer to it, then you shot again. So look, it continue to happen. Every time you see it, goes up, it crosses over. You take a nice entry here, right? It's holding the support. It's above the 5-day. It's holding here, a little pullback here. You see how it has a little bend, kind of like a pullback, and it goes again, boom, boom, boom. Here again, look, took a drop here, right? Took a nice drop here. Again, it happened here. This is your entry point here. Now it's going up, up. It's kind of in between, right? So these are indecision candles. Obviously, you guys know this. Your dojis, right? Your flat crosses, crosses, crosses. It takes a break. I think the news where when Trump was about to come in on the TV, remember? Friday at 12:30, he was expected to come. Look what happened. Market is undecided right around this time. Do you guys remember that, right? The time frame when Trump was expected to come on live, right? So what's happening here? If the market is undecided, went kind of sideways, like, yeah, I'm not sure what's happening. But at the same time, it's holding that 20-day moving average kind of nicely, right? You see as a support here, and it's still kind of in between. They're playing around to see what's going on. Again, this is your entry point. As soon as you see this is something, the trap kind of occurs, right? You know how you set up a trap to catch a mouse, you open up the position, you let the mouse come in and bam, you zap it. So this is kind of your entry and decision point in terms of what's happening with the simple moving averages. Look, it pulled back right at this point. Do you guys see it here? Okay. Right at this point. Ooh, this thing just jumped. You guys see it, right?
Yep.
So this kind of should be a good entry point or exit point if obviously if you're in a longer term trade, instead of doing 5 minute, right? We could look into longer time frame. I prefer, if I do day trade, I look at my hourly, then I just come to 15 minutes. I want to see what's happening in the 15-minute time frame and kind of play around with it. This gives me a clear picture, right? Not too much noise still. Same here. Look at this guy. Look how beautiful it is. See if it makes sense to you what I kind of explained. It always pullbacks, right? The smaller EMAs or SMAs, whichever you're using, it pulls back like it's like a slingshot, it then pushes again. So that should be a kind of entry point right here. You see this? It pulled back, it came down, 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 all the way down. Look, you got your reversal here, an entry point. If you don't want to get into too close, you enter right at the sweet spot between the crossover, whenever the crossover happens between the 5 and the 9, right? Look how beautifully pushed out. I mean, you could still use VWAP, but this is kind of like your, get ready and go type of stuff. Say, hey, I'm getting ready. I'm ready to fire. You enter at this point and look how nicely it played out. You ride it all the way to the top. You still want to hold the position. You could see first one, right? Second one, third one is always your confirmation. This is your nicely built hammer at this point, right? If you guys could see a nice little hammer there, right? Right here at this point. You guys see it, right?
Yep.
There you go. See, then, so it's always 3 candle to form a trend. You want to wait for your confirmation. Let's say you closed it out here. What happened? Look, instead of you saw this one, like, oh my God, it's ready to drop. You saw this one here, the hammer. What happens with the hammer? Boom, it reversed, start going up, 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 and it went all the way to 331.75. Again, it touched right at that little cross indecision candle here, reversal hammer and start pushing up, right? it held a support. This is a Friday. So if you go at an earlier time frame, same thing. Look at Apple, what happened on Thursday. So if you want to play puts, you should reverse on the other side, right? You could reverse it on this side. Look, it held up. As soon as you see this one coming down and this one, the yellow one looking to take over, and obviously you have your VWAP, it's below VWAP, it could take a small put position and ride this baby beautifully down all the way to this point, right? At 320. So this should be a good few dollar point. I mean, if you see this, obviously you will get nervous, right? Oh my God, what's happening here? Buyers coming in, buyers coming in. But at the same point, it did not cross that trap. You see it pulled back to it, and it shot it back right down. Do I make sense, guys? Does it make
I have a question.
Yeah, go ahead.
Like for this one, this chart, how, like, it is a 1 minute chart, 3 minute chart, or 15-minute chart?
It works on every chart, depending what you.
No. I'm saying that, like, are you always see, like, when you are going to day trade or something, what you look for, 1 minute chart or your 3 minute?
No,
minute or 15?
I look at I think you joined late. Who's this, Stockett?
Yes.
Okay, perfect. So as I explained, I typically start my day with morning 1 hour chart, right? And then side by side, I look at my 5 minutes as an entry point. Because if you look at 1 minute, it becomes too noisy, right? It will deviate your attention and it will make you go crazy. Say, hey, 1 minute. Oh my God, the candle is dropping. Oh, it's a red candle. So I try to look at 5 minutes as an entry point, but for I look at hourly. This is for day, right? If you want to go 1 day, maybe 2 day max. But if you want to go into longer time frame, let's say go into 3-4 weeks out, you should always look at your daily chart, right? So when you look at your daily chart, I would somewhat see the same thing, or even on the 4-hour chart, exactly the way I mentioned it to you guys. Look how beautifully it happened, right? Pull back, shot, boom, came all the way down. It pulled closer to it. This is 1 day chart. So you could kind of sense from, if you want to go swing, what the trend is. There should be a clear picture of telling you where you're, maybe, if you want to go 2 to 3 weeks out. Typically, I suggest, even if you do get into hourly or day trade one, try to go at least 2 weeks out. I have been doing that for the last couple of weeks. I've been going out at least 2 to 3 weeks out in case something happens. If it's a scalp, obviously I do a lot less scalping, but you could still utilize this methodology based on your entry point. Look at the time frame in terms of entry and the trend time, so you could kind of estimate how do you want to enter it, because we see different things. We're looking at either RSI about to fly up or whatever. So oftentimes when I enter it and I leave it there, and I say let it play it out, right? And then we go from there. Does that make sense?
Yes.
Okay.
I had the similar question because I was curious. I find it interesting. This whole time you've been talking, you're only at the 5, 15, and the and longer time frames. I just thought that most day traders look at the 1 minute chart, but I was thinking that the reason you weren't was because it creates too much noise, and that's basically what you said. I think I look at the 1 minute chart too much. I need to maybe
yeah.
I need to expand it out. And then also, what reversal arrow is that indicator? Is that the Bollinger Band crossover, or is that something else?
No, this is purely custom coded reversal indicator that I have shared with you guys. It's
Okay, I'll look at the indicator.
Yeah, it's called trend reversal.
Okay, thank you.
It's posted there. So typically try this method out, right? I have given you guys pretty much everything. You're starting from squeeze, the buy and sell pressure. You see this, right? Buy and sell pressure, your auto support and resistance, your trend line. You don't really have to do anything. You just have to kind of learn how to apply those, right? And this simple moving average along with everything else, it should work almost like 99% of the time, unless obviously, news comes out and, Trump pops up, or, anyone comes out on TV and then the market kind of like push it down, right? So I think Apple is on a good trend right now, right? There's a possibility it might push higher. Look at this here, right? Look at how beautiful it is. Came down, it pulled closer to its buddy here on 9-day, and it kind of still holds it. And this is your entry point, right? It got in here. You could take somewhat profit here because this is a daily candle. If you are into stocks or even if you're in an option, kind of hold up, right? Look, Friday pushed up all the way. It was holding all the support. It was holding its support line. So you could apply that to your own trading, right? Play around with it. For your entry and exit point, this, to sum it up, I would say if you use, let's say 5 minutes chart. I like 5 minutes because it takes out a lot of the noises for me. I don't want to worry about, hey, oh my God, what's happening in 1 minute? What happening in the next minute? So I leave it saying that, you know what, it's above VWAP. This should be my entry point. Let me see what it is. If I continue to hold, but still there's a downtrend, it crossed over. If you miss this run up, you could always enter somewhere in this fish looking, thing and this eye looking thing here, circle right here, right? So you could just say, this is my eye. I could enter at some point here. Look, this is a beautiful eye. It's winking at you. Say, hey, I'm confused. Let me go from here. So you could always use this as a trap. That's why it calls EMA trap, right? It kind of captures the moments here. So I'll wrap it up here. We could still continue, but I'll stop recording as soon as this one is over, and I'll send out another invite to you guys, and we can continue to discussing anything else that you guys might be interested in, raising.
I have a question or one more question. Sorry. Can I
No,
go?
I'll send out another invite. I'm gonna end this one here, and then we'll continue on a different session, but off records.
Okay.
Thank you. Yeah, just look out for the other invite. Thank you.
Okay.